What is a mutual fund? Explained in simple terms. Welcome back to Finance with You, your go-to channel for easy to understand financial advice. I'm Rishi, and today, we are going to dive into one of the most popular investment options out there, mutual funds. If you've ever heard the term mutual fund, but didn't quite understand what it means, you are in the right place. This video will break down the concept in simple language, so you can get a solid understanding of what mutual funds are, how they work, and why they might be a good investment option for you. Let's get started. What is a mutual fund? In the most basic sense, a mutual fund is a pool of money collected from various investors, which is then invested in different financial assets such as stocks, bonds, government securities, or other assets. Think of it as a big basket where different people put their money together, and a professional fund manager takes that money and invests it on their behalf. Example: imagine a group of friends decides to pool their money together to buy different kinds of fruits. One person buys apples, another buys oranges, another buys bananas, and so on. They combine all these fruits to create a large, diverse fruit basket. In the world of mutual funds, each fruit is like a different type of investment, stocks, bonds, etc., and the basket is the mutual fund itself. How do mutual funds work? Now that we know what mutual funds are, let's talk about how they work. Pooling money together. When you invest in a mutual fund, your money is combined with that of other investors. So, instead of investing in a single stock or bond, you are investing in a variety of assets. This is the key feature of mutual funds. They offer diversification, which helps spread risk. Professional management. A mutual fund is managed by a fund manager or a team of professionals who decide where to invest the pooled money. These experts analyze the market and choose the best performing assets to maximize returns. This takes the pressure off you, as you don't need to worry about picking stocks or bonds yourself. Types of mutual funds. There are different types of mutual funds based on the type of assets they invest in. Some common ones include equity mutual funds. These invest primarily in stocks. They offer higher returns but come with more risk. Debt mutual funds. These invest in bonds or other fixed income securities. They are less risky and provide stable returns. Hybrid funds. These invest in both stocks and bonds, providing a mix of risk and return. Index funds. These are designed to track the performance of a specific market index like the Nifty or the Sensex. They are low-cost funds and follow the market's overall movement. Net asset value, NAV. The value of a mutual fund is determined by its net asset value, NAV, which is the total value of all the investments held by the fund divided by the number of outstanding shares or units. When you invest in a mutual fund, you buy units of the fund, and the NAV tells you how much each unit is worth. Why invest in mutual funds? Mutual funds offer several advantages that make them an attractive option for many investors. Let's take a closer look at why you might want to consider investing in mutual funds. Diversification. One of the biggest benefits of mutual funds is diversification. When you invest in a mutual fund, your money is spread across different assets. This helps reduce the risk of losing money if one of the investments doesn't perform well. For example, if one stock in the fund falls, other investments in the fund could perform better, balancing out the loss. Professional management. Many people don't have the time or knowledge to pick individual stocks or bonds. Mutual funds provide a solution because they are managed by professionals who make the investment decisions on your behalf. This takes the guesswork out of investing and saves you from the stress of making decisions based on market fluctuations. Affordability. Mutual funds are relatively affordable compared to other investment options. You don't need a large amount of money to get started. You can begin investing in mutual funds with as little as 500 rupees through SIPs, systematic investment plans. This makes mutual funds accessible to a wide range of investors, even those with limited capital. Liquidity. Mutual funds are also highly liquid, meaning you can buy or sell your units at any time. Unlike investments like real estate, where it can take months to sell, you can redeem your mutual fund units and access your money fairly quickly, typically within 2 to 3 business days. Regulated and transparent. Mutual funds in India are regulated by SEBI, Securities and Exchange Board of India, which ensures that fund managers follow the rules and guidelines. Additionally, mutual funds are required to publish regular updates, making it easy for investors to track the performance and activities of the fund. Different ways to invest in mutual funds. Now, let's talk about the different ways you can invest in mutual funds. There are two main methods. Lump sum investment. If you have a large amount of money saved up, you can invest it all at once in a mutual fund. This is called a lump sum investment. However, it's important to note that timing the market perfectly is nearly impossible. It can sometimes be better to invest over time rather than all at once, especially if you're new to investing. Systematic Investment Plan (SEIP). The SEIP is one of the most popular and effective ways to invest in mutual funds. Instead of investing a large amount at once, you invest a fixed amount of money regularly, monthly, for example. SIPs allow you to invest in a disciplined way, and they take advantage of rupee cost averaging. This means that sometimes you buy units when the market is low and other times when the market is high, averaging out the overall cost of your investment. The best part about SIPs is that they make investing easy and affordable, and you can start with as little as 500 rupees per month. Over time, your investment grows, and you benefit from the power of compounding. How to choose the right mutual fund for you? When choosing a mutual fund, there are a few factors you should consider. Risk tolerance. Some mutual funds, like equity funds, are riskier but offer higher potential returns. If you're willing to take on more risk for the chance of higher returns, these funds might be right for you. On the other hand, debt funds are less risky and provide more stable returns, making them ideal if you are looking for a safer option. Investment goals. Think about your financial goals. Are you investing for retirement, buying a home, or funding your children's education? Your goals will help determine the type of mutual fund you should invest in. Performance history. While past performance is not a guarantee of future returns, it can give you an idea of how well the fund has been managed. Look for funds with a consistent track record of good performance. Expense ratio. Every mutual fund charges a fee for managing the investments, known as the expense ratio. Lower expense ratios mean more of your money is being invested rather than spent on fees. It's important to compare the expense ratios of different funds before making a choice. Conclusion. Is mutual fund the right investment for you? In conclusion, mutual funds are a great way to start investing, especially if you're new to the world of finance. They offer diversification, professional management, and affordability. Whether you are looking for growth through equity funds or stability with debt funds, there's a mutual fund out there that can help you achieve your financial goals. If you're just getting started, I recommend considering a systematic investment plan, SEIP. It's a simple and effective way to build wealth over time without the need for a large initial investment. Always remember to research and choose a mutual fund that aligns with your risk tolerance and financial objectives. Thanks for watching this video on what is a mutual fund. If you found this helpful, don't forget to hit like, subscribe, and share this video with others who may benefit from learning about mutual funds. If you have any questions or would like me to explain something further, feel free to drop a comment below. I'm always here to help you on your financial journey.